Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, and sponsored by Revival Gold, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Neil Adshead, consultant analyst at the Commodities Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. Great to be back again.
Now we've got to start with gold, because gold has been pushing towards $2,900 per ounce. It's dipped a little bit today, but it's making a strong push. Neil, what do you make of that? What is driving gold to new highs?
Well, based on most of the commentary, it seems to be driven by, central bank buying and a fair bit of retail buying too. And I think there's a growing concern. The concern's been there for many years, but with the war in Ukraine and obviously the new political uncertainty with the Trump administration, I think a lot of central banks, especially in emerging economies, have been kind of swapping their dollars, US dollars, for gold bullion. And obviously we're not seeing a massive supply response there. So, the market's a bit tight and it's just steadily grinding higher in all currencies. So, people are swapping their fiat currencies for gold bullion, and I don't see any reason why that's going to stop in the coming months and the coming years. So I could see it steadily climbing higher through the remainder of the decade, let's say, until something fundamentally changes in the global economy, which sitting here right now, I can't predict.
With the past week, we've seen US President Donald Trump impose tariffs on Mexico, on Canada, on China, on Colombia, and then sort of walk back on a lot of those initiatives, or at least temporarily. Are Trump tariffs propelling gold higher as well? Are they part of the fact thing?
I think they just add to the uncertainty. People don't really know, big investors don't know what this is going to mean longer term. It's creating more, in a way, it's kind of making the Canadians become more nationalistic, and the Mexicans looking a bit more inward. And I just think there's just massive uncertainty. There's people thinking, maybe instead of having 1% of my net worth in gold, maybe we should have 2%. And I just think that's helping. I mean, it must be helping the gold price to some degree, but I think there's bigger macro trends that have been in place for several years that are just propelling the gold price steadily higher. Trump's policies and the uncertainty it brings it's not going to stop that trend.
Okay. Now, it's been a relatively quiet week on the news front in the mining and exploration space, but there have been some interesting things that we are going to talk about. First up, some M&A action. Predictive Discovery is set to bank about 70 million Australian dollars from the Lundin family and Zijin Mining. The Lundin family is investing 45.1 million Australian for a 6.5% stake in the company, and China's Zijin is investing 24.1 million Australian for a 3.5% stake. Amongst other things, this financing reduces the stake that Perseus Mining holds in Predictive from 19.9% to 17.9%. Predictive has the 5.38 million ounce Bankan gold deposit in Guinea. In mid-2024, the same Lundin family Zijin partnership co-invested in Montage Gold, which has the Canny project in Côte d'Ivoire. And last October, Zijin also bought the Akem mine in Ghana from Newmont. Neil, it seems to be all happening in West Africa. Why is that?
Well, I think it's all happening because the geological potential, especially from a gold perspective, is very high. It's been one of the, warmest places for new discoveries in the world for gold, probably for a good 10 to 15 years. The sort of local politics is quite varied. Is one word you could use. People tend to lump these countries together, but they are quite different. And we're seeing, in places like Mali, Burkina Faso and Niger, which are, very prospective as well. There's military juntas in place right now, which are sort of trying to grab a bit more revenue from the operating mines there at the moment, which is scaring away explorers. But the more coastal countries, prospective countries of West Africa, especially, let's say, Guinea, Senegal and Côte d'Ivoire, those countries are currently booming. And, we're seeing that capital that maybe was going into Mali and Burkina 5 years ago, that's now pivoting to West Africa. So I think people are not necessarily concerned by those coastal West African countries, but the geological potential is fantastic in that part of the world. And, I've backed a few names there myself and generally done very well, primarily because you're still finding 1 to 2 gram good quality gold deposits sticking out the ground, of which Bankan is one of those. And I did own that stock when I was a fund manager back at sort of 4 or 5 cents. And it's nice to see them now with 100 million Aussie in the bank, and that is definitely going to be a mine in Guinea in the next 5 years.
Now, you mentioned that a lot of people view West Africa as the same, as a homogenous same, even though the countries are very different and have very different characteristics. That lend into investor risk perceptions increasing throughout West Africa as a whole, and does that knock valuations down across the region and perhaps creating investment opportunities for people like the Lundins and Zijin?
Yeah, for sure. Yeah, most I think you've talked to most Canadians, most Americans, most Britons, Australians. They and you give them a map of Africa with the 54 countries that struggle to name the majority of them. Put them in the right places, and I'm certainly sure they don't follow the political ups and downs of Niger or Sierra Leone. So it tends to get bucketed in the same bracket, let's say, and a lot of the Western media, the headlines out of Africa lean towards the negative. So you hear of coups and things like that, and people think the whole of Africa is unstable. But there's some very stable countries in Africa, very, very prospective countries. So it is a bit of a shame. But to go back to your question, yes, definitely. If you look at some of the price to NAV valuations on some of the gold producers in West Africa, they trade at significant discounts to, let's say, comparable gold producers in Canada or in Nevada or West Australia.
Now, the Zijin family, the Zijin group, the Lundin family and the Lundin group seems to have been, over the past couple of years, quite aggressive in investing in, advanced stage, development stage, exploration companies. We mentioned Montage, and now we've got this investment here in Predictive. Last year, it was, Fireweed Metals, amongst others. They seem to have a very clear strategy of taking substantial stakes in up-and-coming companies that they presumably believe are going to go the distance.
Yeah, I mean, the family obviously in the resource sector goes back decades. It started with Adolf, continued with Lucas, and now you've got Lucas's sons, leading the charge, and they haven't changed a proven investment strategy, which is to take big bets on, let's say, some of the up and coming deposits in some of the great mineral belts of the world. They're not particularly scared and afraid and put off by what's perceived to be geopolitical risk. They've been in the Andes. They stayed in Argentina for basically 30 years, and had great success there recently with Filo. I can recall I visited Tenke Fungarumi about 20 years ago in Congo, in the world's great copper cobalt deposits. And the Lundin family there were big investors all the way through the Civil War of the late 90s into the 2000s. So this is not a new investment strategy. It's just the third generation of the family continuing a very successful investment strategy that they've made. I mean, must be billions of dollars over the last 30 plus years, and they've done the same in the hydrocarbon sector as well.
Excellent. Let's move into British Columbia in Canada, where you're currently based, or currently are at the moment, Neil, where the provincial government announced that it wants to fast track 18 mining and infrastructure projects to reduce its reliance on trade with the United States after US President Donald Trump imposed 25% tariffs on imports from Canada and then suspended them for a month. Neil, you're in Vancouver. What is the feeling on the ground? Is there a lot of concern about the impacts tariffs will have if they are reimposed?
Not really. Not from the average punter on the street, let's say. Maybe in the halls, maybe in the provincial government in Victoria, maybe there's concern. But as the old phrase goes, never waste a good crisis. I think the BC politicians here are obviously playing a little bit on Canadian and British Columbian nationalism. They can make these statements and say, we're BC, and beat our chest a little bit and say we're going to fast track these projects. But, fundamentally, maybe somewhat cynically, I just think the process won't actually be sped up in any way. It has to go through legal. The process in BC is actually quite well laid out. And, there are mines getting permitted in BC. Artemis, I think, Artemis just poured their first gold bar after building a big mine there. So I don't really think anything's going to change. It's kind of nice to I suppose indirectly the provincial government's coming out and supporting mining, which I suppose is a positive for operators and investors in the province. So I suppose it's it's nice headlines. Whether anything really changes, I think we'll just have to wait and see.
I think I share your cynicism there, Neil, because I would say, if these 18 projects are so important, why didn't the provincial government fast track them before? Maybe the BC government needs its own Doge division. Neil, this sounds similar to the speed initiative that Idaho Governor Brad Little signed a week or two ago, and that is the Strategic Permitting Efficiency and Economic Development Act, or SPEED is the acronym there. And obviously, Idaho's got perhaps a cooler acronym than what BC is up to. Are there similarities?
I think there's similarities from a high level. I can't say I've dug into the details of each one. And, and we are seeing this around the world. There was another one I think it's called the Fast Approvals Track in New Zealand, which just got passed into law several weeks ago. And so we are seeing quite a few countries, I suppose, turning a little bit inward, realizing they need to develop their own mining industry, want to secure raw materials, and two, probably to give their economy a bit of a boost too, if they believe, globalization will lead to less trade, will lead to everybody being slightly poorer. So no, it is kind of intriguing to see at least these sort of smaller countries making these decisions, smaller countries or provinces. It'd be nice if the United States or the Canadian federal government came out and said something similar, but we haven't seen that yet. But to me, it's superficially supportive. Hopefully, big investors are seeing these news headlines and thinking, maybe now's the time to get into mining, and hopefully it results in a little bit of extra capital coming into the sector, which will lower the cost of capital for everybody, and obviously ultimately that flows through to shareholder returns.
Thank you, Neil. Alleluia to that. We have a bit more to come, but first a word about our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Staying in British Columbia, and as Neil mentioned a moment ago, Artemis Gold poured its first gold at its new Blackwater mine, where it plans to produce about 500,000 ounces a year. Congratulations to Stephen Dean and his team there. The company has a market capitalization of almost 4 billion Canadian, which is about the same as producer IAMGOLD. However, also in BC, problems persist as Ascot Resources, where its Premier Gold restart has again been delayed and more funding is required, according to the company. Neil, people say there is often a thin line between success and failure. How or where do you think that line comes down in BC? Is it due to the rocks? Is it management? Is it funding?
It's probably a little bit of all those three. I'd say the fundamental difference, if we're comparing Blackwater with Premier, Blackwater is a big bulk tonnage, sort of reasonably continuous, lowish grade gold deposit that's really is all about moving as much earth as you can as cheaply as possible, and decent metallurgy, and a lot of modern mines these days in copper and iron ore, and iron ore especially, obviously gold. The big mines do tend to be these big low grade deposits rather than the sort of there isn't such a thing as the many big high grade deposits. Whereas Premier is a bit of a smaller, much smaller deposit, higher grade but much more discontinuous, and that makes it quite difficult from a mining point of view. So geologically, they are quite significantly different. And as we saw with Pure Gold, bringing these mines on today, these small, high-grade underground mines, is much more challenging than bringing on some of the larger bulk tonnage open pit deposits, which, we're seeing several of them being built in Canada today, such as, Magino, Cote, and Greenstone. So there is a bit of a renaissance in Canada at the moment with this. I think I counted recently, there's 7 or 8 new gold mines either being built or very close to being construction started on them at the moment. And it's going to add several million ounces to the Canadian gold production, which is quite significant.
Now, as you referred to, Neil, the risk overhanging a lot of developments or restarts is always the question or doubt as to whether the company has enough capital to get it done. And companies are very sensitive to the possibility that there may be a working capital pinch and that they may need to raise a modest capital cushion to get a development over the line. Neil, as an investor, do you tend to assume that a company has enough capital to do the job when it says it has enough? Or do you sort of take a position and assume that they will probably have to come back for more?
It's a case-by-case basis. I will look at the company's projections and then, on what they need to build the mine and how much working capital they need. And then, try and benchmark that, I suppose, as quantitatively as I can. And in the mining game, especially if it's kind of a slightly more complicated project, in maybe a tough location, so it's hard to get spares and labor and things like that, and the weather can be bad, you do have to build in quite a significant contingency just in case. And unfortunately, we have seen quite a few, especially in these inflationary days, we've seen quite a few mines run over. And so I suppose to answer your question, I probably would introduce more conservatism into the financial forecast, and I would probably strongly encourage, if I was a big shareholder, strongly encourage the company to make sure they've got enough money and a significant buffer just in case. Because the last thing you want to do, like Ascot had to do a couple of days ago, come back to the market, say you've not got enough money, and hey presto, the stock drops, tens of percent significantly, and existing shareholders are doing a financing at a significantly diluted price.
Yeah, pulling their hair out, I imagine. Okay, let's go to Portugal, where some more M&A action, where South American gold producer Cerrado Gold is to buy European base metals developer Ascendant Resources in an all-stock deal valued at 11.2 million Canadian. This will see Cerrado obtain an 80% interest in the Lagoa Salgada polymetallic project in the Iberian Pyrite Belt in Portugal. A bit of a head scratcher, this one, until you see that Cerrado Gold's CEO and executive chair, Mark Brennan, is also the founder and CEO of Ascendant. Neil, aside from Mark Brennan, what logic does this deal have for you?
It doesn't have much operational logic. Obviously, the assets are in different countries, they're different commodities. Just feels like it's two juniors from the same stable, from the same office. One's doing better than the other. The one that's not doing so well is struggling to raise money. So one helps the other out, which I never really like to see. I think if Cerrado wants to do M&A, there's 2,000 or 3,000 companies in the world. It seems a bit unusual. Or the best one they could do is one that actually sits in their own office. So yeah, call me a bit cynical on deals like this. There is actually a common investor here too. Sprott Resource Stream and Royalty has provided financing packages to both companies. So maybe there was a little bit of the lender here pushing two together. And the only real benefit I see is that the G&A goes down. The sector loses one company. And because that, the G&A bill is quite significant these days for any listed junior. So I suppose if two companies can become one, there is some degree of a G&A saving, but that's pretty small in the big scheme of things. That was the driver to this merger.
Now, Ascendant's share price had been driven right down. I think it was 6 cents, very low valuation, and presumably very difficult for it to raise more money. So this does seem to be a deal where the various people, as you mentioned, Mark Brennan and Sprott, are sort of keeping their previous investments alive by merging into Cerrado Gold, which conveniently brings us to my phrase of the week. Now, many CEOs talk about having skin in the game, but I'm sure investors would much rather have someone who's even more committed with more of their personal net worth invested. Neil, how does having flesh in the game grab you?
Oh, it's super important. And skin in the game really means you want to see I call the executives the key decision makers. So, you really identify who are the key people in the company. Sometimes those people are actually on the board rather than the executive. And you want those key decision makers to be a significant shareholder like you are as an investor. And you also want to be able to see, I suppose, that they bought those shares in the market at market prices rather than actually issuing themselves 1 or 2 million shares at 1 or 2 cents in a founders round and then never buying shares again. So my ideal is that every time there's an equity raise, if the company feels like now is a good time to be selling shares because they think the shares are a good buy for the investors, I would like to see these key decision makers also participating. Now, they don't have to have 90% of their net worth in the company, because I understand people have mortgages and children and various other bills. But yeah, even sometimes just a token top up of their position in the same equity raise that you're buying as an investor sends a very positive signal to the market. And that's so a roundabout way of answering your question. Skin in the game is good, but it's got to be kind of like real skin in the game, as in they bought the shares in the market at the same price as you, rather than just being issued with cheap founders paper.
I think that's where that having flesh in the game was going, not just skin in the game, something more, something deeper, something more profound, flesh in the game. And that was courtesy of Lewis Black, CEO of tungsten developer Almonte Resources. That's what we have time for. Neil Adshead, thank you very much for joining us today.
No problem. Appreciate it. Thanks a lot, Paul.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.